morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Monday. External debt reaches a record high as of end 2021.
Analysts expect the Bangko Sentral to keep rates at record lows during its meeting that's later this week.
PLDT plans to spend up to 13 billion pesos for the construction of its largest hyperscale data center to date. The telco also looks to invest at least 1 billion pesos each year for cybersecurity.
And an industry group is reiterating its appeal to the government to extend the work-from-home setup for IT and BPO firms. We begin our broadcast with the country hitting a record high external debt in 2021.
That's as the government continued to ramp up borrowings to finance its COVID-19 response programs. Fresh data from the Bangko Sentral shows that external debt reached more than $106.4 billion last year, higher by 8% from the amount of almost 98.5 billion pesos recorded in 2020. The country's external debt is equivalent to 27% of the GDP, slightly lower than the 27.2% ratio in 2020. RCBC chief economist says the further reopening of the economy was a key factor in the lower external debt to GDP ratio. Moving forward, Mike Ricafort says both the government and the private sector should take into account the risks that come from the weaker peso for decisions regarding external debts.
Now, the Bangko Sentral is widely expected to keep policy rates at record lows. That's in line with its signals to continue supporting economic recovery. A Businessworld poll showed that 15 out of 17 analysts anticipate the Monetary Board to hold the current rates on March 24th. That's the second policy review this year. Analysts believe the BSP will remain focused on providing support for a more sustainable economic recovery despite inflationary risks caused by the Russia-Ukraine war. But analysts also said they are seeking more forward guidance from the BSP on its imminent tightening. This as they believe that the space to retain the current accommodative stance is getting smaller.
Now on to some updates on oil prices. Unioil is projecting a possible rollback tomorrow, the first time this year. That's after 11 straight weeks of hikes. Unioil is expecting diesel prices to go down by around 10 pesos per liter, while gasoline prices are seen to decrease by up to 5 pesos and 30 centavos per liter. As of this morning, the Energy Department and other oil companies have yet to release an official announcement on the possible fuel price rollback. But last week, the DOE said it is also anticipating a drop in fuel prices this week as global crude prices ease.
Now, the LTFRB has rejected the proposal for a temporary fare hike, but one transport group is refusing to give up. They're pushing the government to increase the minimum fare to up to 15 pesos. Camille Samonte with this report.
The LTFRB has denied the petition for a 1 peso provisional fare hike for public utility jeepneys despite high prices of fuel. With this, the minimum fare remains at 9 pesos for the first 4 kilometers. Many jeepney drivers are disappointed.
Kasi kung sa amin laking bagay na yung magtaas ng piso sa taas ng diesel ngayon. Pahirapan ang biyahe.
Yung iba kasi ginagawa 10-10 na minimum. Yung pasahero naman, nakaintindi din yung iba. Yung iba hindi rin. Kulang talaga ma'am, napakahirap ganun.
The LTFRB explains it had to balance the rights of the public who relies on public transport and of operators to gain profit. The board also cited the position of economic managers on a provisional or permanent fare hike. They say it would create a domino effect in the prices of basic commodities and services. Instead of a fare hike, the government has already started providing fuel subsidy to PUV drivers. So far, around 87,500 jeepney drivers nationwide have already benefited from the program. Commuters, on the other hand, are divided on the matter.
Para sa akin, okay lang magtaas kasi kawawa din naman yung mga drivers. May mga pamilya din naman sila na kailangan nilang buhayin.
Mas maganda yung 9 pesos pa rin. Yung peso kasi mahalaga yun .
But one transport group insists that the LTFRB must honor the fare adjustment formula. They also filed a separate petition to hike the minimum fare to 15 pesos and for a 1 peso provisional hike per succeeding kilometer. The board is scheduled to deliberate on this by March 22.
Nakakaawa naman yung aming driver dahil kung madadagdagan ng piso ng aming pamasahe, kahit sana pambili man lang ng 2 kilong bigas ay malaking tulong sa ating mga driver.
LTOP is also calling for a modified distribution system as some operators reportedly refuse to give the subsidy to their drivers. For News 5, Camille Samonte, we are One News.
Now, in other news, the IBPAP is appealing for an extension of the Fiscal Incentives Review Board ruling on work-from-home incentives for the IT BPM industry. This as the ruling is set to expire on March 31st, forcing IT BPM companies to require employees to return to the office in order for them to keep their tax incentives. The FIRB had earlier rejected proposals to extend the work-from-home scheme for the industry until September this year, but even PEZA is calling on the FIRB to reconsider its position and at least consider a hybrid work scheme. Now, to better understand what the BPO sector wants the FIRB to reconsider, we have on the show Jack Madrid, President and CEO of the IT and Business Process Association of the Philippines, or IBPAP. Good morning, Sir Jack. Thank you for joining us today.
Thank you for having me. Good morning to both of you.
All right, sir, again, the FIRB already denied the petition to extend the work-from-home setup here. So what's going to happen come April 1? Are you all going back to your offices? And how many BPOs and workers are we expected to be affected by this decision by the FIRB?
Our present workforce is 1.4 million Filipino employees who have been, working from home or on a combination of work from home and on-site operations in the past 2 years. I'm very proud to say that in the past 2 years, we were able to transition very well and serve our global customers throughout the challenges of the pandemic without sacrificing any productivity or customer satisfaction.
Okay, sir, just to take a step back here, why do you think the FIRB is pushing for this setup at this stage? What exactly do you also stand to lose as an industry in terms of incentives? Should you not, or should you go against this ruling?
Well, IBPAP fully supports and understands the need to reopen the economy. We are fully supportive of that. What we are seeking in the short term is really a longer transition period or runway so that we can smoothly move back gradually over a phased approach from our work-at-home setup at the present time towards, what we feel should be a more optimal setup because, the world has changed in the past 2 years. Everyone has been working on a combination of back in the office and primarily at home. And I think there are certain distinct advantages to having this hybrid work model.
Sir, just to clarify your point, are you asking for more time to be able to go back to normal in-person or face-to-face work? You just need some more time? Or are you saying that, the industry has changed, we need to adapt, we cannot expect this to happen again?
Or maybe there are compromises that at least you are willing to consider?
I'm very confident that there is a middle ground to be found. So to answer your question, Danny, it is yes to both. We are seeking a smoother runway to avoid any disruption in the capabilities of serving customers. We are talking of, a 3 to 6 month period to transition. And hopefully that endpoint will be, an optimal balance of what we are now referring to as a hybrid work model. Because, and I guess to answer your other question, what do we stand to lose? There are a host of reasons. The ease of doing business in the Philippines for our investors remains critical for us to retain our leadership position in the global IT BPM industry. And I think, globally, research report indicates that as many as 70% of global employees in the industry expect to work under some sort of hybrid work model. So at risk is really, the ability to attract and retain employees for us to grow, because there is, growing demand for Filipino talent from our global customers. Even at the worst of the pandemic in 2020, we were one of the few industries to actually grow, adding 23,000 jobs in 2020 and almost 100,000 jobs in 2021. Having said that, we have, we're very appreciative of the extensions and privilege of being able to work from home extended by the FIRB and PEZA. But I'm hopeful that we can find a middle ground so that we can address the concerns of our employees, the expectations of our customers, and most of all, continue to retain the Filipino talent, which is in high demand from our customers all over the world.
Sir, I want to pick up from your statement earlier. Do I take it to mean, sir, that you are foreseeing possible job losses here from the industry should you at least return to offices? And how many of your workforce do you project would have to be laid off or let go? Affected?
Well, it's really, the overwhelming preference for Filipino employees in our industry to find that balance, that hybrid work model. And, that's a very hard question. We will not know that, but we are hoping that we are able to find this middle ground so that we avoid any problems of attrition, which is another very big challenge for our industry.
All right. Now, given that as well, sir, is it true that companies, some BPOs are considering moving out of BPI or out of PEZA and relocating to other BOI registered locations?
We have heard conversations like that. I mean, obviously, our investors and our employers are mapping out different kinds of scenarios as they, prepare this for this very, what we think might be a challenging next several months. It is not easy to transition, over 1 million employees who have been working from home in the past 2 years and expect them to be back on site, on April 1st. That's really the rationale for this smoother runway that we are seeking. And in the long term, this is consistent with the goals of the government to fully reopen the economy. And also, it's worthwhile noting that almost 30% of our workforce is in the countryside. Many of them have moved during the pandemic to their hometowns. And I'm not sure a whole lot of them will want to come back. And the other thing that's very important to note is, the health and welfare of our employees. It has been a challenging 2 years. And we really want to be able to address their needs as they transition back to what we hope to be a hybrid model.
Sir, have you weighed the costs and benefits between the output and productivity during the work from home setup versus the incentives provided by PEZA should everyone indeed start working on site?
That's a great question, Danny. I mean, it is not an easy one to answer, but I would say on the productivity side, on the ability to retain talent side, which is the foundation of our industry, the Filipino talent, we feel it's very important to retain them and attract them. There is a $500 billion addressable market, and I would really like the Philippines to seize more of that market share. After all, it is not just the Philippines and India anymore out there. There have emerged other IT BPM regions that are looking, for jobs as we are. And based on the growing demand all over the world for offshoring business, outsourcing their operations, I think we have a golden opportunity here to increase more jobs for Filipinos. Now, in the short term, to answer your question, I mean, there are some incentives that are going to be affected should our request for an extension be denied. Those are short-term issues, but we also need to look at the longer term. And I feel that there will be some middle ground that can result in a win-win situation for everyone.
Okay, sir, as you push forward this proposal really to go through or to at least extend that hybrid work mode for the BPO sector, are there experiences or models from other BPO industries in other countries that you are also using as a basis for your proposal? And at the same time, if we decide to stick with the traditional mode of work wherein your employees are in their offices, do we stand to lose to these other countries, other sectors, and other industries, for example, in India?
There is a war for talent that is raging. And so everything counts. The ease of doing business includes the ability to attract and retain talent. It includes other things like digital infrastructure. It includes the need to upskill and reskill digital Filipino talent. So there's a lot of factors, but I will say this, there is a lot of competition all over the world because in North America and Europe, we see a growing demand for our capabilities. And we, as a country who happen to be a young country, we have a demographic advantage that I would like for us to seize because, we've been doing this for over 2 decades now. We have grown from the traditional contact center services to a more diverse and complex set of services and operations serving our global customers, including healthcare management, including animation, including game development, and financial services. So this is a golden opportunity for us. And I can say, to answer your question, we have seen other IT BPM locations enact, flexible work models to take advantage of this opportunity.
Sir, last question before we let you go. Just in the short term, should the FIRB ruling hold, are there incentives for employees to be working on site in the short term for you, of course, to retain the talent?
Well, that would be primarily the decision of our investors and their employers. But I can say that first and foremost on their minds is to retain talent. I think this is a big factor. We are still all trying to figure it out, but this is a big decision coming up.
Okay, thank you so much for that update. That was, of course, Jack Madrid, President and CEO of IBPAP.
Now, coming right up after the break, local shares are expected to rebound this week.
We'll tell you why when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, some flicker of hope there as Russia and Ukraine continue their talks. This, of course, amid the devastating consequences of 24 days of war and counting.
Exactly, Jess. This is, of course, the 25th day of war, but peace, as you mentioned, has a positive effect, even if that is still not quite there yet. Optimism as well has lifted the markets last week, even as the PSEI retreated, although this was after it had corrected already for 3 straight days. Oil prices as well, that's something that the world has been watching, settled higher, but on a weekly basis, that was the second straight week wherein the oil prices finally pared back. And last week, overseas investors sold the most Philippine stocks in 8 months. That was 3 billion pesos, the highest we've seen since July of 2021. But as you mentioned, there's a lot of optimism still, Jess, that this might be resolved at some point or another. And you can see our markets here, at least domestically, up by 0.6%. But if you take a look at the chart here on Bloomberg, you know, this yellow line is the moving day average of the past 200 days. And we are really just hovering on that level. You know, we were way above the moving day averages already for the short term for a couple of months already. Now, this, according to Mercantile Securities, investors will be on the sidelines moving forward, and the range will be between 6,600 and 7,100 for now, and a lot of uncertainties still there. But you know, when you look at the domestic picture, a lot of other issues coming out. Just for instance, the economic team has proposed measures like subsidies for agriculture and transport, when you know, to circumvent, of course, this issue of the oil prices and also inflation. They've also said they would be temporarily lowering tariffs on some food imports, among other non-monetary measures. And according to COL Financial, they said Philippine stocks are ripe for bargain hunting. If they fall again, they said, and quote, stocks don't deserve to trade back at their 2021 lows. And they did mention the ones that are less sensitive to inflation or to oil prices, they do favor that: property, power, banking, retail, and even telecoms, Jess.
All right, now, Dan, speaking of banks, tell us more about the latest Business World quarterly banking report. A recovery is well underway.
Exactly. Well, hopefully, at least when we look at the fourth quarter, we did see the loan growth grow the fastest since the first quarter of 2020. That's, again, from, you know, the Business World's quarterly banking report. The aggregate loans of 46 universal and commercial banks jumped by close to 6% year on year in that quarter. That's around 10.15 trillion pesos worth of loans that were given out in the fourth quarter. Another good thing, Jess, is the bad loans. Those are, of course, the non-performing loans. That's lower. That's around 7.11% of all the loans, around 372 billion pesos. So that slipped by 7.11%. So it's lower compared to the year before. And just last quick check on PLDT. Speaking of telecoms here as one of the other sectors that are, let's say, less affected by inflation. This, according to PLDT, they did mention they will keep investing around 1 billion pesos in cybersecurity every year as attacks and threats continue. This, of course, as the largest hyperscale data center is set to rise. That's the PLDT Group's 11th Vitro facility. That's going to be in Santa Rosa, Laguna. PLDT enjoying a 50 peso bump up to their share price. That's around 3% of a jump this morning. Meanwhile, here are other headlines we're keeping our eyes on. The SEC is planning to create a financing and lending division to exclusively regulate lenders. The Finance Department says this unit will focus on the agency's crackdown and on, abusive and illegal lending. This effort, according to the agency, has led to the conviction of 76 individuals based on 8 cases on violations of the Lending Company Regulation Act.
The Philippine Star reports that foreign arrivals in the country are not likely to return to pre-pandemic levels until 2024. Data provided by the Pacific Asia Travel Association, or PATA, to the Star showed that visitor arrivals in the Philippines are expected to reach almost 10 million by 2024 under a mild scenario. For this year, PATA expects visitor arrivals in the country to reach nearly 2.3 million and eventually increase to over 6 million by next year. However, under a severe scenario, the association forecast that a return to pre-pandemic levels may not happen even until 2024. Now, this just in, at least 2 companies have announced that they will roll back pump prices tomorrow. Sea Oil and Petrogas will slash diesel prices by 11 pesos and 45 centavos, while gas prices will go down by 5 pesos and 45 centavos. Some good news to start the week there, Dan. And that's the first look into the business day this Monday, March 21st, 2022. Join us again tomorrow at 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
Happy Monday, Jess. Some good news indeed. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.